In today's video, I'm going to teach you Wyckoff for beginners. So this is going to be a quick video from beginning to end about Wyckoff and smart money trading. So if you're new to smart money trading, it's pretty much trading like the banks and not like the patterns with no indicators. So this video is meant to be informative. Also, I'm going to break it down to 4 different sections. That way, if you are looking to elevate your skills but not sure where you are, I want you to comment what phase you're in and what the next phase is. And that way I can guide you if you want to purchase anything from Smart Money Academy, whether it's risk management course, the one-on-one mentorships, the Smart Money Playbook, and so much more. So let's get right into it. Okay, so I'm showing you guys structure. Now, structure should be done on the 1 hour, but because I'm going to use a blank screen after, I'm just going to keep it on the 5 minutes. So structure, you want to start from price action. Price action is current price. You're going to go for your highest high or your lowest low. So at this case, this is my lowest low. Notice how I can't even see the candles right now. I don't need to see the candles. I need to zoom all the way out. Okay, if you're taking notes, that's a note. Zoom all the way out, then go from my low to my highest high. So I'm not in here because there's a high higher than this, there's a high higher than this, there's a high higher than this. Highest high means there's no more highs, and then lowest low means there's no more lows before I start going high again. Okay, so current structure on here is up structure. Okay, so that key here is lowest low, highest high, nothing in between. Okay, now that I showed you that on candlesticks, I'm going to show you without candlesticks. So as we said, high, low, right? Now, where people sometimes mess up is that they think if they get a low that they're now in down structure. No, you need 4. Okay, so we have 1, 2, 3, 4. So now that we get this new low, we only have 1 low, right? So this low, let's make it green. And then technically this high would be part of this new situation. So we have 1, 2, 3, 4 highs for up structure, and we only have 2 pieces for down structure. If we get a pullback like this, then we have 3 pieces, right? But guess what? We're still in up structure. We would need 1 more piece of structure on the downside for it to be considered down structure. So this is actually very important because this is where people mess up. You literally, if you mess up this, everything else you're looking for is going to be wrong because you're going to be looking for the wrong market cycle, the wrong schematic, etc. Okay, so you need the complete 4. Now we are in down structure and we can look for a sell. Okay, so if we are here in real time, okay, we are looking for price. This is where we would actually get that last break of structure. Okay, so if price does not break this right here, then we don't have a low. So at this point, I'd still be looking for up structure. I'll be waiting for my point of interest, and I'd be waiting for an accumulation because I'd be going down and waiting for an accumulation here for price to accumulate, to go up, entry, and up. Preferably break a structure here or break of overall structure here to continue going up. So don't get confused with 1 push down and 1 pullback when it's still overall up structure. So phase 1 is going to be structure and market cycle. So now let's tap into market cycle. So as we said, this is up structure. Okay, so up structure going up generally means you're looking for a reaccumulation. Once we reach a point of interest where price turns around, then we are looking for a distribution. Okay, so once price turns around in this point of interest, and we'll talk about what that means when it comes to break of structure, because a lot of people use break of structure wrong all the time, then we're going to go back down into a down structure, which down structure would be a redistribution. And if we land in a place of a POI, then price might collect any drawdown they had from manipulation previously over here, and they could accumulate and go back into market cycle. So this is the overall market cycle. Now, something I want to mention quickly is that when it comes to breaker structure, you're only going to break structure in a distribution or reaccumulation. Now, in the schematics, which we'll get to, we do have a quote-unquote breaker structure, which is a sign of strength, but I like to call that a continuation of structure, because breaking structure means turning around in a point of interest. So we're still in phase one right now, and I'm going to start talking about points of interest on a basic level, and that will be the end of phase one. So take a screenshot if you are in this phase and you don't understand market cycle yet. So the last part of phase one is understanding points of interest. Points of interest are order blocks or imbalance. So right now I drew an imbalance, and this is current structure. Now, points of interest is where you are waiting for price to go to. So I would literally set an alert right here and call it distribution. Why? Because we are in down structure. As I mentioned, I do have the platinum package where you can join the group chat and you're going to get access to the full course, and you can ask questions and much, much more. So you can get that, or the Smart Money Playbook if you need the extra help and want to ask questions or get examples like what's in the chart gallery. So that is in the platinum package, and I do have one-on-one mentorship as well, and that is the elite package. I also have the Smart Money Risk Management Workshop. So again, you're kind of understanding the back testing and the overall Wyckoff, but you're struggling to get it in real time, or your risk is not really working out. You're exiting too quickly, you're break even too quickly, and you don't know how to place these trades correctly or journal. Then the Smart Money Risk Management Workshop is for you. Pretend this is drawn better, candlesticks. And I'm waiting for price to come back up and not go higher, because this is unhealthy price action. And I'm waiting for price to drop. So again, I'll explain unhealthy price action in my course, or there's another video. So we're waiting for price to come up and then sell. So understanding where points of interest are and understanding if you're looking for the right thing. So you're not going to be looking for an accumulation and down structure at all. For you to look for a reaccumulation, these are the lower highs, the minor highs. You would want to, again, just kind of enter that counter trend. So now we're not in up structure because this is minor trend. This is the overall trend. We'd have to beat this 4 times, but we are structurally coming up into the point of interest. So then we can easily reaccumulate to this point. You want to be careful about reaccumulating too high in the range, because then you might not have to take profit for it. So that's the end of phase one when it comes to structure, market cycle, and points of interest. Now we're going to dive into schematics. Schematics is when we are waiting for the cycle to build a distribution or accumulation within a schematic. Schematics are available through understanding in the Wyckoff methodology, which is great for detailed reading. There's a free link to that in my bio if you go to Scribd.com, or you can just sign up to a free 30 days at Scribd. So that will be listed in the bio, and you can read about that. Now, the Smart Money Playbook is the next level to that, because the book doesn't really give details on how the schematic should look. It just kind of gives you overall overview. Schematic number 1 is going to be in a distribution. So a distribution generally looks like this. So a distribution is going to have its highest point in the point of interest, generally speaking. So we're going to have our 3 drives up and our 3 drives down. So coming from price below, we're going to have our BC, AR, which is our trading range. Then we're going to have our UT. UT has to come back in the trading range at least 50%. Let's say we get another test for fun. Then we're going to have our MSAL, another test. So tests can happen as many times as they want. Then our UTAT is going to fill the gap in the point of interest. Then we may have an internal test of the trading range. And then our major SAL. The SAL should break overall structure, not just your MSAL. So this would be our breaker structure. Again, more details will be in the course, but this is just for you to know where you are. This is phase 2. And then we're going to enter through another point of interest. Now, this point of interest is better, is a confirmation if it aligns with the trading range. So I have a confirmation checklist. Confirmations are different than the actual pieces of the schematic elements. So the confirmations are just small, pretty much tips or little rules that the schematic will do so you know it's 100% valid. Okay, so trading range alignment is one of those. Once we have the trading range alignment in the point of interest, this is where we sell, and trading range alignment would be like so. Okay, so that is phase 2. So here's the label of phase 2. These are second tests, which I didn't label. I just want you guys to understand. 3 drives down, break of major structure. Remember, we just learned that. And 3 drives up into the point of interest. And we have another point of interest that's going to take us down. So that's the end of phase 2. Now, phase 3 is going to be with risk management. So when it comes to placing trades, again, that's a whole separate story that I'm not going to show in the charts. That's in the Smart Money Risk Management workshop. But I am going to talk about your 1 to 10 trades. So because the banks are making these movements, we're not guessing in and out. These are major movements that push the whole economy. So that's why we're able to grab such large risk to reward. So when we're making this 1 to 10, it's already prepared by the schematic itself. So the way it works is that we just grab our tool, and I want to make sure you guys do it in this order as I teach. Okay, align your tool. You start with the stop loss first. Now the stop loss is going to be above the high of the candle, and take profit is going to be at your MSAL. And that's going to give you your 1 to 10 automatically. Oh, let me make this a 10 pip. So you're going to use the wicker body, which is not shown right now. I'll show you guys that. And then you want to use your SAL or the nearest equal lows. So just hopping over to the group chat, this is the chart gallery. So once you join my program, you have access to the group chat where you have a bunch of examples of on chart scenarios. Now this is a type 2 where we have a migration block. If you guys didn't know, there's more than one type of distribution. So the preview you just seen is just one type. There's a bunch of different types that I have. So anyways, this is an order block, entry 50%. So stop loss is above this high right here. So people ask me how I get a 10 pip stop loss and don't get stopped out. It's because it's not me, it's the banks. This is how the market moves. They don't waste time. They don't go and draw down. So you guys see this snipe right here, boom, wick entry and take profit, and take profit was at this nearest low. So this low was here, then price went in and came out. So this would be the overall SAL, the end of the SAL. It was here, but it's finished here. And we got it with a 1 to 10 way before that, and then price trailed. So if you join the Platinum package, you guys get access to the group chat, which has examples of all this real-time trades that are happening for me and other members. That's pretty much the end of phase 3. Now, phase 4 is kind of like you got all this already. You've been watching my channel for so long. Thank you so much. And you are understanding the concept, but you're struggling to find this in real time. Phase 4 is about reaching the actual next level that it's going to take for you to get better at trading. Whether it's working one-on-one and we're working together in the elite mentorship meeting every single week, or, you know, the risk management workshop, and that's separate because that has my 22 confirmations that will help you most likely find a better Wyckoff setup, because you're going to look around the charts and feel like everything is doing half of these rules. You're going to find points of interest. You're going to find price going to this place. You're going to find break of structure. But if you're not putting it all together and you're not mixing the recipe in order in the right way, it's still not going to work out for you. So that's why the risk management part is a whole separate section. So I want you to comment below. Let me know what phase you're in and what you need to do to get to the next level. Thank you guys so much for watching. Don't forget to comment, like, and subscribe. Make sure when you comment, you type in the timestamp so I know what you're talking about. And I'll see you guys in Smart Money Academy.